Hello and welcome to the day ahead. It is Monday, March the 16th. I'm Andrew Gagan. The local market is set to add to recent losses this morning, with ASX futures down just over 0.1%. This follows a very negative session on global markets on Friday as oil prices rose further, with the Iran war continuing to disrupt energy supplies, heightening concerns over fuel prices and interest rates. Stocks on Wall Street resumed their sell-off, led by losses on the Nasdaq. The S&P 500 ended down about 5% from its record closing high from late January, while the small cap Russell 2000 ended at its lowest level since the beginning of the year. Tech shares posted the biggest percentage loss, while the utilities sector was the best performer. Design software maker Adobe dropped after announcing that its long-term chief executive will leave his role once a successor is appointed, renewing worries over potential AI disruption. Meta slid following a report that the social media giant has postponed the release of its AI model Avocado to at least May. Data company SanDisk added to recent gains, along with Western Digital. And this week, Nvidia's annual developer conference will bring renewed focus to the AI trade, which sparked volatility for the tech and other related shares this year. Treasurer Jim Chalmers has said that Treasury was expecting headline inflation to hit the mid to high fours this year, due to the Middle East oil price shock, well above the RBA's target range of 2 to 3%. The central bank is expected to lift the cash rate by 25 basis points to 4.1% when it announces its policy decision tomorrow. In the US, consumer spending increased 0.3% in January amid higher prices, while the Middle East conflict is forecast to add to inflation. Retail gasoline prices have soared more than 21% since the war began 2 weeks ago. Economists expect the Fed to keep interest rates on hold while signalling rate cut delays when it meets this week. Well, US Treasury yields were mixed on Friday. The 2-year was down slightly at 3.73%, the 10-year at 4.28%. Australian 3-year government bond yields rose to 4.6%, while the 10-year has touched 5%. Markets are priced in a 70% chance the RBA cash rate will be hiked this week, with a 100% chance by May and around 3 hikes in total by the end of this year. Well, the US dollar index rose more than 0.5% on Friday. Risk aversion has seen the Aussie fall to 70 US cents. US President Donald Trump has threatened more strikes on Iran's main oil export hub, Kharg Island, and said he was not ready to reach a deal to end the war, which has shut the Strait of Hormuz. Brent crude rose more than 3% over the weekend to $103 a barrel, the highest price in 4 years. Gold has slipped, pressured by a stronger US dollar and inflation concerns. Spot gold at around $5,020 an ounce. Copper fell almost 2%. Iron ore a little changed at 110 US a tonne. And Bitcoin is currently just below 72,000 US dollars. Ahead locally this week, the focus will be on the outcome of the RBA policy meeting tomorrow, and on Thursday we get jobs data for February. Overseas, today China releases February retail sales and industrial production data. Wednesday, the US Federal Reserve reveals its policy decision, along with the Bank of Canada. Eurozone inflation data for February is also released. And on Thursday, there are policy decisions from the Bank of Japan, the European Central Bank and the Bank of England. And New Zealand's fourth quarter GDP is revealed on that day as well. That is your week ahead. We'll see you again tomorrow.